following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we were playing some music here on TFNN like they usually do, and they selected a song called Tiger by Fabian Forte. He happens to be my cousin, folks. His grandmother and my grandmother were cousins. I met him twice through the years. The first time was in 1981. We were in Las Vegas for a rock and roll review. My daughter, my oldest daughter, went to school with, well, so did my younger daughter. She was just a year younger, but she was best friends with Laura Avalon. They're still very, very close. That's Frankie Avalon's daughter. He has 8 children, I believe, but they lived about a mile away from us there in California. So she was always over at the house hanging out. Really, really nice young lady. Turned out to be a beautiful human being, too, like all of his kids. But anyway, Fabian was... he only had a couple of hit records, but he's made his whole life on rock and roll. He still looks great. He is does his same routines with all these other fights. The way we're getting into this, folks, is Bobby V passed away of Alzheimer's at the age of 73 yesterday. He was one of the originators of rock and roll. So, well, not originators, but he's one that brought it to its fruition and stuff. So, anyway, we'll get back to the markets here. I have to finish the funniest story. We were in Las Vegas for this rock and roll review with there was Frankie Avalon. Oh, there was just so many people there. I can't remember all of them, but we were standing in line we were in the reserve line because we were guests of Frankie Avalon, and my daughter, my youngest daughter, was 13. Both of my daughters were very beautiful, and they were dressed up to the nines. I mean, they really were decked out, makeup and everything. And my daughter, asked me for $20, and so I gave her $20. I said, "What do you want it for?" She said, "I just want to look around in the gift shop." Well, a few minutes later, I can't find her, and I'm looking around, and I see her sitting at a blackjack table. She's 13 years old, and she was very good with numbers. She could play gin rummy with anybody, and she was very good at blackjack, because that's how I taught them how to count and stuff when they were little. She's there playing blackjack, and she's up about $60, and I walk over to her, and I'm standing behind her, shaking my head, and I called the pit boss over, and I said, "Do you know how old she is?" He said, "Oh, my God." He said, "Don't tell me." And I said, "She's 13. He said, "Oh, dear God." He said, "Please take her out of here." He said, "There's so much." He says, "We're breaking so many rules." He said, "I can't even tell you." He said, "Tell me what you want." He said, "I'll give you whatever you want. Just get her out of here." So I walked her over, and I said, "Honey, you have to leave because, you're underage, and they're going to get very angry with you, and they might put you in jail." And so she took the money, and anyway, I thought that was rather funny. Okay, in fact, none of them ever gamble anymore. Let's talk a little bit about the markets. I posted the chart of the DAX in like we usually do. As you can see, we're up here almost in we're up into new high ground. But what I really want you to see is notice this area where we are with the narrow ranges up in here in the DAX, folks. That's not a bullish. That's not a bullish pattern, in my opinion. If we look at the longer term here in the DAX that we did yesterday, you notice that we have broken out into new high ground. Now, if we the slightest bit of weakness here will make this a pretty big triple top, and that's that's one of the things that we want to keep in mind. The other thing that's very important is that we are making new highs in the NASDAQ today, folks. There's no question about it. We're up here in that 49 area. My original target on this was 49.17, and we hit 49.15 about 10 minutes ago. Whether this is going to be, the major top or not, we'll have to wait and see. But this is certainly, a really big number up here in this 49 and change level. Now, we're not anywhere close to this in the S&P or anything like that, as you're all well aware. The S&P is, going a whole lot it's much, much, let's try to put the words together. It's much, much weaker, as we already know. Now, if we take a look at the overall stock market here, and we will right now, we're going to look at the New York Stock Exchange Index. And we will, oh, just a second. We have a question here from Mr. Z in the den. Where does the 49.17 come from? That's the, if you go look at your 30-minute chart, you're going to see, I don't have that particular chart today because it's an intraday chart that gave me the multiple numbers there. But, you know, you're going to see the situation where the market is making multiple tops up in here, but each time it does it, it starts to back off a little bit. Now, we backed off over 150 points the first time that we hit that number, and now we're back there again. Now, remember, the New York, the NASDAQ is very, very heavily weighted. This is the most biased of any of the indices we have, because you have this NASDAQ 100, and about 20 of, not even, yeah, probably 10 to 20 of those stocks control the whole darn thing, because they're cap weighted, and some of these things, you know, they've got a lot of capitalization. Look at Amazon. You know, I think Jeff Bezos passed Warren Buffett, and then we have Facebook, and then we have Google, and you know, there's just so many of them there that reflect this market's index, but it's not really what the overall market's doing. If you can look at the New York Stock Exchange Index, you can very easily see that level very, very closely. So that's the main thing of why we want to be watching that level very, very closely. I've got the daily chart in here somewhere, but frankly, when I was preparing my charts this morning, I actually did a little bit, a few too many, and now I'm having a hard time pulling them out. Usually it's pretty easy, but today is not so easy. But we'll try to find it here in just a second, and we'll post it so you folks can see, you know, what we are doing, because it is making a new high at this 49.19 was a high. The number that I was looking at was 49.17, and I had this, you know, my beeper went off. That's how I know that the number was hit. So that's going to be an interesting number to watch. The overall market is still not, you know, going down yet, but you know, as you can see from the New York Stock Exchange Index and also from the E-mini S&P, we're still in relatively, you know, strong downtrends. There's no question. We did this one yesterday to show you the importance of this 2148 level, and as you can see, the high that we made yesterday and then again today was 2149, and that was nothing more than a 61% retracement of the September 20th, which was our 21st, which was our autumn equinox level. So this is really we'll see what's going to go happen with it for, you know, from this particular level is what we'll be watching for today. Gold and silver, we'll cover those after we come up to the break, of course. And then we have a couple of questions from some of our listeners that I need to cover. One is going to be on the natural gas. And we'll, if there's any commodity that I know very well, is natural gas. Okay. Okay, we'll take a little break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at the VIX index. We talked about this yesterday at this 13 level. This is where we are right now. We hit the 13.01 last night. In fact, the low was, one second, please. The low was at 1286, so we're right up against this, this downtrend line. So keep an eye on this. Now, remember, we are making new highs in the Nasdaq. Mr. Z asked a question about that number. The reason for that number was a 1.27 expansion on the daily charts. I believe that's what I was looking at. One of our listeners in the Tiger Den, Marshall, put the posted that price up because that's what I was looking at also. And what I do, folks, is when I see these numbers coming together, I put my alert in to Ensign, and when it hits that price, it rings a bell and sends me an email to tell me, hey, something has happened. And so then I go to look at the pattern to see what's going on. But if we look at this VIX index, you'll notice here that we are in a really nice pennant. And as you can see, we've got some defined downtrends. We got some a little bit higher uptrends right now. So there's a possibility here that this could be a pretty good bottom in the VIX. Longer term, I think the VIX is anytime you get it around 13 or 12 or 11, you just buy it and hold on, because you're going to get moves like we saw in September, right into that cycle low that we were looking at from our good friend Norm Winsky. You'll notice that we did have we actually almost doubled in price in the VIX just in a matter of 3 days. So there are some signs that there's a tiny bit of fear out there, but believe me, folks, it's really, really small. There's nothing much going on out there as far as fear. We can see that in the volatility index. We can see it in the stocks, how they're just trading at very, very narrow ranges. And I frankly believe there's not that much I mean, there are a lot of people involved in it and stuff, but nothing like what's involved in the bond market and what's like involved in the foreign exchange markets. Those are where the really key things are. And we are still right at this same level here. We're going to take a look at this dollar index again because this 99 level where we're trading right now is still key. Now, the euro has gone down and made a slightly lower low than it did on Friday and again on Sunday and again on Monday so far this morning, but it hasn't really collapsed from that level. We did make a low down there at 108.56. Which is it's trading at 108.59 now, but watch that. That euro has to collapse in order for the thing to really get it moving to the downside, folks. It really needs to do that. And I don't mean by collapse. I mean, we got to get it below 108. Then you'll say, yes, we've got a pretty big move to the downside. We're looking at really strong resistance here in this dollar index, folks. That's a 1.27 expansion of the previous high. It's also a 78% retracement of the high we made a year ago. So this is a key number. And we've got the patterns there to help identify it. You've got the ABCD patterns lined up. And folks, look at that dollar index chart. You can't make this stuff up. I mean, how can they say technical analysis isn't helpful? I mean, look at it. I mean, the trend lines are there. Even if you didn't know ratios, didn't know 786 or 127 or 1.618 or 6.1, even if you didn't know any of that, you could do trend lines and see where major support's coming in. And if you colored in the patterns with a crayon, you'd be able to see that these triangles are very, very symmetrical and they repeat over and over again. And that's the real value of technical analysis. Okay, Larry, you can get down off your soapbox now. Let me take a quick second here to talk a little bit about the contract for that we're watching here in natural gas. We've had a question about the difference between these. We were looking at a top in this just about 2 weeks ago, but let's take a look at this. You'll see there are two different options here, folks. You'll notice we have on the left Z, which is the December option, and on the right we have X, which is the November option. Look where X is. X is trading near the August lows, and look where December is. It's only at a very, very 61% retracement of it. What's happening is the shorts are in control in the November contract. In other words, there's not any available. I mean, there's too much available gas at this particular time for delivery, and so this is my assumption because we're coming into delivery in this, and so there's just too much out there at this particular time. Now in December, that might not be the case. That's why you see a big discrepancy. I can remember one time a couple of years ago in this contract where we were down $9,000 in one day. That was 9 handles in one day, and that was because of the delivery problems they were having in natural gas. So if you've ever been inclined to use a stop, this is the kind of market you want to use it in, because you make the first mistake is you have a bad trade on. Heck, we do that all the time. That's like breathing. That's going to happen no matter what. But your second mistake is you fail to protect yourself. Someone's asked me the question, well, can you use a desk stop, where you just wait till it hits that price and then you get out? Well, if you have the patience of Job and the greatest discipline since Moses, yes, you can use a desk stop. But frankly, I have never met anybody, one or two people, that are able to use a desk stop. The problem is when that stop is hit, then you start second guessing, well, maybe this is another bottom. And before you know it, the thing has gotten out of control, and then you got a really bad problem. So put a stop in there, folks. They're not out there searching for your stops. They never have been. My reason for going to Chicago Mercantile Exchange in 1982 was to determine how fair it was. Did these floor locals and order fillers have a big advantage? Yes, they have a big advantage, but do they take advantage of it? No, they don't. They're there to fill orders. And that's the real reason. They've got a deck that's worth they used to have a desk that was worth millions of dollars. And if they would have been caught flashing stops or telling people where those stops were, that deck would have been taken away from them. And believe me, it was a very closely held place, a secret that where all those orders were. Sure, there might have been some shenanigans, but nothing to the magnitude that some people are paranoid about. Really, it was very, very fair. no problem in my mind to even worry about that at all. Fact is, one of my favorite stories about the stops. I was in pork bellies. I was short pork bellies, 3 contracts, and there was a cattle on feed report that came out, and it was incredibly bullish. It was supposed to be limit up in cattle three days in a row, and I was short 3 bellies, and I went over to the girl who was holding the deck for Ira. For Maury Oster, and asking, can you get my order on top of the desk? And she came over to me and says, he wants to see you. And I walked over to the pit, and he was a little guy, about 5'5", and I was standing on the floor. He was on the first step, so we were eye to eye. And he said, I understand you have a problem. And I said, no, sir. I said, I made a bad mistake asking you to put my order there. He said, please, whatever the fine is, I'll pay it. I apologize. He says, I hear you have a problem. And I said, yes, I have a problem. I'm short pork bellies, and the cattle are going to be up the limit, and I'm probably going to get massacred. He opened up his deck, and he showed me right on the first order was to sell 1,000 February pork bellies at the market. And I said, wow. I said, is that a legitimate order? He said, then that's just the first one. He said, go back and trade with those animals on the other side of the room. That was where the foreign exchange and gold was. So that was the only time I ever saw a deck.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the intraday chart of the dollar yen, and you can see here this was the chart we posted yesterday in the den, and now we are above the level now. We're trading at 104.70, which is beyond these levels. In other words, we've extended beyond where our original prediction was, but the trend has certainly been up in this. We're at some pretty significant resistance at 105 here in the dollar yen, so pay relatively close attention. Now, the next chart that we want to take a look at here is the euro. And as you can see in the euro, we are right down near the that 108 and 50 level. We hit that again today. If you notice, this is a weekly chart, so we've been here for 2 weeks, which is really basically Friday and today. So this is a real critical level at 108.50. The more critical level, of course, is at 108 even, and that's where the 786 retracement comes in. So the main thing about this is the fact that the U.S. dollar index at this level where we're trading now, I believe the high has been 99.20. We have a lot of numbers up in here. Now that they can fail. They can certainly go popping through there, and then the next level would be another $800 to $1,000 higher per contract, and that would be up around the par level or even 101. So those are the parameters that I'm watching in the foreign exchange. We're seeing also the possibility that the British pound is trying to make a bottom in here, but again, there's no confirmation of that. Now, I've had a request to take a look at one of the things that we talked about last week when we had our good friend Rich Anderson of Anderson Capital Management on the air, and that is the hogs and the cattle. If you'll notice here in the cattle, his recommendation was look to be long cattle around the 97 level. The low came in at 96.25, which was about $300 under the thing. It's already made $5,000, folks, in 7 trading days. And if you'll notice, you had 2 breakaway gaps to the upside. The first one was on Friday, and then of course you had another one yesterday. So this is telling you that there's something really big happening. If you go back and look over the last 7 or 8 months, you don't see that same type of explosive move. You see a pretty good move in the July-August area. It's very similar to what we have right now, but the fact that it went limit up, which means they caught some people on the wrong side, the short side, and then it gapped up after that. So there's a lot of resistance coming into cattle here at this 105, 106 level. But the key here is to look for a retracement back, because if we get a little quiet 3-day retracement, or even not so quiet 3-day retracement, we want to watch what the numbers are going to be. Because if you look at the bottom of this chart from September to October, and if we pull back here to the back to the 101 level, you're going to have a really nice head and shoulders pattern, and it could be very, very symmetrical. If it does it in the next 4 or 5 trading days, or even into next week, you'd have a really nice head and shoulders pattern. Regarding the hogs at 42, which Rich was also looking at. Remember, the cost of production on the hogs is about $45 a pound. We're now trading right near $44. So if you happen to buy those hogs that we were trying to recommend to you here, is to put your stop at break even at 42 and let them go. It's at the same type of pattern in cattle, but not nearly as strong, just not nearly as strong. Now, there's a big difference between the values of the December contract in hogs and the April hogs. The April hogs are trading better than 14 cents more than the December. And the reason for that is these people are not stupid in the futures business, and they know by the time you get out there, there's going to be a lot less hogs, and that's going to cause the market to go higher. So they're already factoring that in. So this is part of the things when you're looking at things, you have to look at each contract to tell you, what you're looking at. And the other thing that was really interesting was, we mentioned this last week, is that we started to lose open interest in hogs. And we've learned nothing from all this technical stuff. We know that if open interest is dropping and prices are dropping, that tells you that the people are leaving the market, and the market is in a technically bullish position. And that's exactly, what's happening. So we'll see. someone's asked a question about the resistance in the S&P that we looked at. Folks, all I do is I just look at the charts, and that 2148 level was a 61% retracement of the high that we made back on September 20th. That's all it was. And we've hit it 3 days now. So that tells us that it's a pretty important thing. If it goes through it, 2150, 51, then all bets are off and we're going to go a lot higher. But that's what's really happening this morning. Nothing more or nothing less. The real important number is this dollar index number at this 99 to 99.20 level, folks. That's the real key, because that's the real money. This darn thing is worth a whole lot more than you might think when you look at some of these things, because this is where the real money is, in that foreign exchange market. If we look here at this E-mini, which everybody loves because they think it's the hold on a second. You'll notice here that we have this descending pennant that we have in the E-mini. It also, that downtrend line was hit again at that 2148 level. And so if we break below, the 2125 level, which is quite a bit away, that would tell us that this triangle is most probably getting ready to rectify itself to the downside. So, and remember the divergence that we're having. The New York, the New York NASDAQ hit a really key number today, that 1.27 expansion at that 49.17 level. So that's another thing that's important. We also want to be looking at the IBB, which is the we'll put this up here, which is the biotech index. And if we can get that below the 259 level, this is going to be a very, very negative scenario to the market. Remember, this was the index that really started the whole bull market back in 2008. It was the strongest coming off the bottom, and it remained strong for 6 years. So this is, but we've made a major high there now back in July of 2015. So that's telling us that this market might be heading to the downside. Watch that one very, very closely. Okay, let's see. We have another. Oh, one other question about the precious metals. Let me get to that in just a second here. I think we got a break coming up, but I wanted to show you what I was looking at this morning in the precious metals, because it has a chance to bottom in here, but frankly, it's looking less and less like it wants to move out of here. So we'll be very, very careful, of course, to say whether we're going to be long the silver and the gold or anything like that. It doesn't look good right now. And if you watch what's been happening to copper, copper's been breaking down. So that's another indication that possibly, this market is not nearly as bullish of a scenario that the people on the financial press would like us to believe. So that's a key thing to, keep a really good mind on. Now, I need to hold on one second, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off.
Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to take a quick look here at the Treasury bond market. We did this yesterday. We'll do it again today. We went up and we took out the previous day's high by 1 tick. And believe me, 1 tick in Treasury bonds, folks, is very significant because that trades a whole lot more than the S&P and the NASDAQ and the Dow Jones combined. This is a really, really big market. And so this has a negative bias. If we can get above the 166 level, then it would be you could be turning it to the upside. But right now, all we've been able to do over the last 8 or 9 days is to make a 382 retracement of that previous high. This has potential for being a much bigger move to the downside than what we would probably think. So watch this one very, very closely, because this level that we made yesterday at 165 010 is really very, very important number. We've broken 1 full point, which is $1,000 in that, but we haven't really broken down from below those other lows. If we get it below the 163 level, then you're looking at something, very, very ominous, and it would look like a hog chart that was heading down, and that went, that dropped over 50% in value. So I'm not saying that's going to happen in bonds, but the actual pattern in bonds is very, very bearish. We've seen this in the utility index. Now, I'd like to make a quick correction here. When I was talking about copper, we had that support come in at the $2.10 per pound level. We got down to 209. We stayed there for 3 days, and as you can see today, we've had a really strong rally off of this level of 5 cents a pound. That's helping to pull the gold and silver up a little bit. So those are just some of the things in the metals that we're watching, because we think that there's a chance that we could get a little bottom here in silver, but so far we have not had much to give us any hope at all. But if we can get let's try it again. If we can get gold above 1277 and have it close there for 5 or 10 minutes, then that could be a pretty good breakout. So watch that one very, very closely as far as a potential for a breakout in gold at the 1276 level. That would be just about $34 off of the bottom 2 weeks ago, which is the harmonic number, of course, for gold. Oh, I know what I wanted to do. Gosh, there's a video here, folks. Let's hopefully I did this correct. Just 1 second here. I want to post this in no matter what, so you can. Oh, there it is. If you get a chance, I've posted into this into the Tiger Den today a YouTube on sonic geometry. Folks, this is hands down the best absolute description of what these numbers mean more than anything else in the whole wide world. So watch that. If you don't have it and you want it, drop me an email. I'll send you the paste to it. But it is called Sonic Geometry, and it is fabulous. It goes through Pythagoras. It goes through Fibonacci. I mean, it's just absolutely amazing, and how these all fit together, and also how they fit together on a planetary scheme. Why the moon is, 2,160 miles, and all this stuff is just absolutely mind-boggling. It's just the best there is. If you ever doubted anything about the harmony in the universe, you have to watch this video. It is totally awesome. There's, you just can't say, well, as you can hear, you can't say enough about it. So we'll watch it. Anyway, keep an eye on this euro down in this area. It looks like it has a chance here to make a bottom. We did take out the old lows. There was no selling in there. So at this level, you wouldn't have to risk more than about 20 pips, which is around $200. If you're in the VIX that we talked about, what I would do is if the market gets unchanged on the day, I would just step aside in the VIX, but we'll see if that's going to happen. But it looks like it has a chance here with this triple bottom that we're having here in the VIX. With great symmetry also, by the way, tells us this is what we should be, watching, what we're looking at. One of the key levels today in the S&P and the E-mini was 2140. We hit that. We're now trading about 3 or 4 handles higher than that. And all that was just an ABCD and a 61% retracement of the range from yesterday. That's all that was. And with these tight ranges we're having, it really doesn't take very much, for the market to make these indications for what we're watching here. Oh, someone's asked a question about the election. Folks, I don't know anything about the election. All I know is the astrologers that we had on said there was going to be a big surprise. Well, it'll be a big surprise if we even have an election. Who knows? It's pretty crazy out there. But we live in interesting times, which is a Chinese curse, folks. So that's the main thing to look at here. Okay, one other question someone had was about the corn. We made a pretty good top in the corn up at that 368 level. We've now backed off about 13 or 14 cents. Yesterday, we were looking at that wheat at that 406 level. We hit 401 overnight. Put your stop at 396 if you bought the wheat. That's what you have to do is you got to protect yourself. So that's the main thing of what we want to be watching is the protecting of our capital, because we don't know whether we're going to win or lose on any trade, and we don't know how much we're going to make on any trade. So the only thing you can control in the risk-reward equation is the risk, and that's the key to be watching. So that's the main thing to be careful about. Okay, let me take a quick look here at this E-mini S&P. What we did yesterday is we made today's low was an exact 382 of the low we made on Friday the 21st when we were at 31.23. So if we get below that, that tells us we're coming down a little bit lower. But right now, it looks very interesting. If you'll give me a second here, I will post this into the DAN so you can see the numbers and make the decision yourself to see if this is the kind of thing that you want to get involved in, given these numbers that we're looking at. And all I have to do now is to find the little puppy, and then we can put it into the listing here somewhere. Well, it doesn't look like it's going to be today, boys and girls. That's, well, shucks. Well, shucks. Well, I can't find it. I'm going to have to wait till after the break to put it up because I've got so many of them in here now, and I can't categorize them when I do them very, very quickly. I think that's not it either. Nope, that's not it. Well, here it is. I found it. There we go. Just takes me a little while. You'll see here this was a 382 and a 61% retracement. The question is, why is the euro a buy? The reason is the dollar index. The euro is 50% of the dollar index, and this dollar index is sitting here at this 99 and change level, and it's not that's a really strong resistance. You go back and look at this thing. We have a 1.27 expansion of the high we made last month, and we're at a 78% retracement, exactly where we were 7 or 8 months ago. So that's the main thing to look at. But there's a lot of support in the euro between the 108.50 level and 108. Below 108, there's not any support because then you're going to be heading towards pi. But right now, because this dollar index and it's 50% of the value is in the euro, that's why I'm looking at it. All I'm looking at is to not risk very much. And we went down, we made a lower low than Friday, we made a lower low than Sunday, we made a lower low than yesterday, and yet the market hasn't really collapsed. So there's some buying coming in the euro at that point. So watch it. It may not work, but this is what you try to see. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look at the New York Stock Exchange Index. This is the broadest measure of what stocks are really doing. The NASDAQ, as we mentioned, is incredibly skewed to high-priced stocks. But the NYSE is a very, it's cap weighted, which means the number of shares times the value gives you, the price of what the capitalization is. As you'll notice, since September the 1st, we've been in a downtrend. It's a very distinct downtrend, and lately we have just completed a 8-day rally, almost 2 full weeks, coming in at touching this trend line. which was also a 382 retracement of the high, 50% retracement of the previous high. So this tells us that stocks are going down, even though the NASDAQ is higher. We saw this in March of 2000, folks. The NASDAQ made several new highs before it finally gave up the ghost and, gave back 86% of the gains it made over the past years. It dropped 86% in value. So we can see increased volatility down the road, but frankly, with the Federal Reserve on hold for any interest rate things, and they're doing their best to unseat the Republican candidate. So it's going to be hard for the market to have any small-time effects, but the larger effects, could already be out there. So if you see an outlier event where the currencies open up 100 or 200 or down 1 or 200, that tells you that that event is most probably taken place. And we'll know about it within a few weeks or months maybe, but will tell us what history will do is explain what happened during that time. We saw the same thing with the Swiss franc several years ago, where they decided to kick the euro out, and the Swiss franc dropped like $25,000 in about 2 minutes or less. And then it rallied, back about another 10 or 15,000. And then what they did was they disallowed all the trades in that time frame, with the exception of a few. Why it was the exception of a few, I'll never know, but that's what happened. So we do live in a time where you got to protect yourself. That's why stops are so important. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.